Good morning. Good morning. How you guys doing today? Glad to have you with me. Hope you guys had a good weekend. Hope you guys who are members had a chance to read the latest Aruja report. A lot of good stuff in there. Worked all weekend on that sucker, but definitely prepared for the week ahead. So thanks for joining me on this Monday morning's edition. Today I wanted to spend some time looking at the sectors, see how they are performing, because the market is looking really good for a continued move higher. I mean, everything is setting up here for a continued move higher on the S&P. And so with that, we want to look at which sectors are really performing well so we can take advantage of this move that is likely going to be coming. So I wanted to spend some time doing that today. Yeah, so we'll look at the ETFs that represent the different sectors, and we'll look at what the supply and demand dynamics are on those charts to determine whether or not we should expect some movement to the upside or maybe some stalling. Because, essentially we want to be in sectors that are moving. We don't want to be invested in sectors that are not moving when the market is strong. Otherwise, all this momentum of the market going up, it's going to be missed. It's going to be all for no reason if you're invested in stocks that are not moving. Okay, so really important to look at the sectors and see how they are performing overall. All right, so first thing I wanted to point out is if you take a look at the S&P futures here, you can see that from the lows of price, we had a market move of 8.15%. Now, why am I pointing this out? Well, because we want to see, when the market was moving strongly, we want to see what the other sectors were doing. Excuse me. In comparison to it, right? How are we going to know if how are we going to know if the market is moving alongside, or if the sectors are moving alongside the market, or if they are not? So we can see from the lows we had a move of 8.15% in the S&P. Okay. Now remember, this S&P holds stocks in all sectors combined. So this is everything combined, all the major companies, 500 of them. And since mid-May, or April, sorry, since mid-April, we had a rally of 8.15%. Okay, so now let's take a look at the sectors. So we can see by looking at this here, I've selected a 1 month time to look at these sectors here. Okay, you could choose 1 day, 5 days, 1 month. I think the 1 month time span is good because, as you know, within that month we had a rally in the S&P of 8.15%. So now we're looking at the sectors here. What do we see? There's only one that comes close to matching the S&P, and that's the technology sector. So within the technology sector, if we click here, we can take a look and see that they have a list of companies there. Obviously, NVIDIA is there, and NVIDIA has done extremely well. And it's for stocks like NVIDIA that are helping the technology sector with this incredible increase, okay, in percentage over the last month, which is not bad, 8%. So we also have utilities. If we click on utilities, you'd see the companies, some of the companies that are in the utility sector, VST, okay, NRG, Energy, Public Services, Service Enterprise. So you can go through those and take a look at which charts have the best setups for you. But this is what we're comparing it to S&P index, okay? And this is how all the other sectors compared. If you look at energy, it did extremely poorly. And there's a reason for that, and we'll get to that shortly. But if you remember some of the sessions that we've done in the past, we've talked about the energy sector, and what I was bringing to everybody's attention was how we had supply being contacted. Okay, here we had right here 1 contact, 2 contacts, 3 contacts of supply, which was holding price to the downside. So we were not expecting any type of strong performance from the energy sector, okay, over the last few months. But let's start with the material sector. So when we look at the material sector, what do we see? Let's take a look at the monthly view of the material sector. So what I'm seeing on this chart is a clear uptrend, nice looking uptrend. Okay. Trend line to the upside. We have institutional buying that has been taking place, forcing price to the upside. And now we have an area here between $80 and $84. So that's just below price. Right now we're at $91. So we have an institutional area of buying here that took place. And so the thinking here is that if price was to retrace down to the $80, $84 area, we would expect to see a continued move to the upside with more buying coming in from the institutions. So material sector looks good to me. Right? And so, if you wanted to take advantage of a move like this, you could either buy the ETF, or you can go to the material sector here and look up specific companies. Right? So you have a big list of companies. IP, International Paper Company, has already moved 32%. So it may not be the best company to invest with. Let's see. Last 34. International Paper Company in the last month. Yeah, major move to the upside. Index weight change 11, change 32%. 35, yeah, to 45. Pretty big move. Okay, so you could look at the individual stocks, DuPont, DD. Okay, that one's looking like it's making a good move as well. Okay, very nice move to the upside. So you could do your individual analysis and determine which one you like, if that is what you're interested in doing. But overall, the material sector chart looks solid. Okay, doesn't look like there's anything going to stop the material sector from going even higher. So we go down to the next one. We look at the communications. If we examine the monthly time frame as well, we can see that there was 2 areas of supply here. Let me just show you. There was 2 areas of supply on the chart. Now, if the banks wanted to push price lower, they would use these areas of supply to push price lower. So instead of using them to push price lower, they were just decimated, broken through. So if there's no areas of supply to facilitate a move lower, then obviously what you have is price moves higher. And that's been taking place since late 2022. So as far as I can see on this chart, there is nothing to stop the communication sector from heading even higher. Okay, we can switch through to the other time frames. It looks like we have a supply area that needs to be addressed on the higher time frame, but besides that, doesn't look like anything's stopping it. So we go over to the communications sectors. We have Netflix, Google, News Corp, a bunch of them. Okay, Fox Corp, Electronic Arts. I haven't looked at Netflix for a bit. Let's see how it's doing. Yeah, it's looking good. Strong. Okay. Same thing that I was saying with the sector. Okay. We have supply zones that are not being used to facilitate moves lower, so price is heading higher now. Okay. So this is looking really good for a continued move to the upside. Very good. Okay. Now let's go to the energy sector. So as I was mentioning previously, we had a significant area of supply up here, which price was contacting and just couldn't manage to break through. Well, we're getting a move right now that's a lot stronger than these previous moves to the upside, which is somewhat promising. Only thing is that we're getting a retracement, and I think, just speculating here, I think the reason why we are getting this retracement is because there might be some really big money looking to buy the energy sector down here. Okay. So if we look at the energy sector, let's see here. We know that Occidental Petroleum is one of them, Oxy. This is one that I've been tracking personally very closely because Warren Buffett purchased this one, and his average price is about $50.78. Okay, and I want you to pay attention to the price action here. You see the rallies, okay, and then this move to the upside and the retracement. Very reminiscent of the sector ETF and its movement, okay? Now, one thing I've been pointing out to members is that we have significant supply up here that's keeping price down. And I'm waiting for specific signals to take place on the chart, and then the odds of buying and having price continue to the upside will be much higher. Okay, that's energy sector looks like it's potentially getting ready for a move to the upside, right? All depends on what happens in that $80 area. If I see significant buying taking place from there, then definitely we're going to be seeing a continued move to the upside. Financial sector looks really good. Okay, the financial sector looking very strong. So we had significant buying taking place here, so much so that it caused price to move to all-time highs and close above all-time highs. All right, so I've got my eyes on this one. I think this is a good buy. And this area here, $37, $38 area, is a spot where I've got my eye. I think any type of retracement to that area could see a very dramatic move to the upside build from there. Okay. The industrial sector, very good, very strong. We've been talking about this one for quite some time. I had a target here that I set on June 16, 2023. And it's been hit. That was for 119. So that one's been hit. And so industrial sector, really good. You come over, you take a look at the industrials. You could either buy the ETF, or you can look to see what companies you want to invest in. Johnson Controls, JCI, that's a big one. Okay, and you take a look and you see very strong move to the upside. Okay, now we have supply that's currently in play, but if this ETF is or if this sector and its supply and demand is any indication, we expect to see this eventually move even higher. Okay. So there's a whole bunch of them. VLTO. Look at this one. Okay. Very strong mover. Just recently came out. Yeah, I see very strong areas of buying by the banks here. Very strong. Okay. Technology sector. So very good, very strong. We know this. NASDAQ. We've been tracking the NASDAQ for some time. And look, price is continuing to move to the upside. New areas of demand are being created. There's no reason to suspect why. There's no reason to suspect that the technology sector is not going to continue performing. So, and you have a whole list of technology companies that you could invest in. Okay. Let's go to consumer staples. So right now we have in consumer staples, we have supply that is holding price down. So not one of the better sectors to invest in. When we compare it over the last month, you can see 1.58% return as opposed to 460 on the S&P. So not the greatest. And again, there's always reasons why. Okay, always reasons why. And the reason why is because we have massive supply area here. Contacted once, twice, and this is the third time it's contacted it. So essentially we have price in a major range on these higher time frames. So this supply is going to act as a barrier for price to continue higher. And this is why price is lagging here. All right. So it's not a sector that I'd be looking to rush into investing into. Okay. Utility sector, not too bad. We recently contacted some supply, and we dropped from that. And if you look at the utility sector, 7.13%, which is not bad. That's that rally up towards this area of supply. Okay. It was once contacted. When we contacted again, we're likely going to see price stall out. So utility sector, would I want to be buying into it right now? Probably not. When you've got other sectors that are performing so much better, it's better to just skip through that. Healthcare. Healthcare is doing pretty well. We had an area of buying that we informed our members about, and price came into that buying area and it shot up. So this is institutional buying that's taking place. It caused price to move from the 140s all the way up to 146s and so forth. So it's looking pretty good. Are we going to get continued buying is the question. Now, I think the chart looks good. It's closed up into new highs. If we look at the healthcare section or sector, there's a bunch of companies there that we could look at. I think part of this rally is these big companies, Moderna. If you take a look at them, they've done well recently with promises of different things, which I won't go into, but we can see the strong move on them. One stock that I do have my eyes on is Amgen, okay? AMGN. Now, we had a long signal on this one when price was down here, okay, below 280s. And then we had earnings, and all of a sudden, boom, we saw the massive buying coming in from the institutions. So I'm still watching this one. I don't want to buy this stock at these highs, but I am interested in buying this one. I'm just waiting for it to get to a better price. But this one is one on my watch list. Okay, and last but not least, we got consumer discretionary. And as you can see, it's hitting supply. I'll point that out in 1 minute. But first, let's take a look at Consumer discretionaries, 0.78%, okay, in comparison to the 4.6 on the S&P. Why is that? Again, everything in the market is dictated by supply and demand. And what we can see here is we had a contact of supply, which is keeping price down. So when you have the S&P removing supply zones and progressing to the upside, we have these sectors holding their supply zones and keeping price to the downside, which is keeping price from performing as well as the other sectors. So when you look at consumer discretionary and you look at their stocks, these are stocks that I wouldn't want to be purchasing right now. Okay, Tesla. We've talked about Tesla and how Elon Musk was taking massive shares, closing off massive shares. And not just that, but we had massive supply coming in from those selling of shares or offloading of shares, not just from him, but from big institutions, right? All working together, closing shares off at the same time. So, so I'm not that surprised to see the consumer discretionary sector not performing as well as the S&P, right? Royal Caribbean, RCL, I had my eyes on this. We had one of our targets reached already. Yeah, this one is performing well. This one, Royal Caribbean, Carnival, they've been doing very well. So in this sector, this would probably be the only one, this one and the other cruise lines that I would be looking to invest in. But Tesla, I would be staying away from that. Okay, ladies and gents, I think we're good, right? Those are pretty much all the sectors that I wanted to cover. And I think that should help you to better understand what we can expect from these different sectors and from the stocks that are in those sectors. And that's it. If you enjoyed today's episode and you got something from it, please leave a like in the comment section or leave a like on the video. And if you want to leave a comment, I always look forward to seeing your comments. You guys are very kind with your wonderful comments that you leave for me, and I always appreciate reading them. Wonderful comments that you leave for me, and I always appreciate reading them. Okay? So that's it. I'll let you go. Enjoy the rest of your day, and we will talk to you soon. Take care.